Welcome back to the deep dive. Our mission here is, well, it's pretty simple. We take complex information, the kind of stuff you'd normally have to dig for, and make it immediately useful for you. Today, we are heading to the Caribbean, specifically Jamaica, to look at a really crucial piece of financial security. It's the mandatory NHT peril insurance.
Right.
We're going to dive into what it is, why it's a requirement, and, importantly, how it stacks up against a more comprehensive homeowner's policy.
And our source for this is a great guide from a Jamaican real estate platform. It really lays out the rules for homes financed through the National Housing Trust, or the NHT.
And for anyone unfamiliar, what exactly is the NHT?
So the NHT is a major government agency in Jamaica. Its whole purpose is to make housing more accessible and affordable. You can think of it as the main engine for homeownership for low and middle income families there.
That context is so important, isn't it? Because when a government body is backing these massive loans, the rules around security and collateral, they're going to be strict.
Oh, absolutely. They have to be standardized.
Which brings us right to the name. It's not just home insurance. It's peril insurance. So, okay, let's unpack this. What exactly is a peril in this sense?
That distinction is, it's the whole key. In insurance, a peril is a specific, a sudden and unexpected event that causes damage.
Like a fire.
Exactly. A fire, a hurricane, a flood. These are defined catastrophic events. The NHT policy is built almost entirely around these specific things.
Okay, so that leads to the big question. Why is this mandatory? Why can't you, as a homeowner with an NHT mortgage, just decide to, take your chances?
Because the house itself is the security for the loan.
The collateral.
Precisely. Imagine the property worth maybe millions of dollars in borrowed money gets completely wiped out by a hurricane. Now the NHT has two huge problems.
A destroyed asset.
And a homeowner who still owes a massive debt on a pile of rubble. It's a disaster for everyone. So this mandatory insurance, it's really a safety net for the lender first. It guarantees that if the worst happens, the property can be repaired or rebuilt.
So it protects the NHT's investment. But it also means you, the borrower, aren't stuck paying a mortgage on a house that doesn't exist anymore.
It's financial resilience, baked right into the country's housing strategy.
That makes a lot of sense from a 30,000-foot view. But let's get into the mechanics. The source says the premium is usually just built into your monthly payment.
Yep, that's to ensure there's no lapse in coverage.
But what's happening on the back end? How does the NHT make sure those insurance funds are actually used for repairs?
That comes down to a really important concept called assignment.
Good.
When you get the loan, the insurance policy is assigned to the NHT. That means the NHT is officially named the primary loss payee. So if there's a claim, the insurance company doesn't just write a check to you.
They can't.
They can't.
No.
The money is released under the NHT's control, and it's used first and only for the repairs and reconstruction.
I see. So there's no chance of someone just taking the cash and vanishing, leaving the NHT with an unsecured loan.
None. It removes that possibility completely. The system insures the money, restores the collateral.
It's like an escrow account just for disaster funds. That's a major piece of their model. Okay, so let's get specific on coverage. This is where it gets really interesting because the list of perils tells you a lot about the risks in Jamaica. What's typically covered?
Well, the list is very focused on major external events. You've got fire, of course, that's universal. But then, very specific to the region, you have hurricane and windstorm, flood, and earthquake.
Right, the big ones.
Those are non-negotiable, given the geography.
I also saw a few others that stood out. Lightning and explosion are pretty standard, but the policy often includes theft, and this is the one, riot or civil disturbance.
Yes, that one is telling.
The fact that riot or civil disturbance is a standard peril in a national housing policy, that's really something.
It is. I mean, the exact list can vary a bit, but its inclusion suggests that historically it was seen as a necessary protection. It basically treats a societal risk the same way it treats a natural one.
As something that could damage the physical structure of the house.
Exactly. It recognizes that if widespread instability leads to structural damage, the NHT still needs a way to rebuild those assets that are securing its loans.
That's a fascinating insight. It's about protecting collateral against all major threats, not just weather. But like with any policy, what's not covered is maybe even more important.
It often is, yes.
So what are the critical gaps here that every homeowner needs to be aware of?
The gaps are there by design because the policy is meant to protect the lender's collateral. So it typically excludes anything to do with the owner's personal property or, and this is a big one, their own neglect.
What do you mean by neglect?
The major exclusions are routine wear and tear and any damage that comes from long-term poor maintenance.
Okay, let's play that out. Say a huge storm hits, that's a covered peril, but the insurance adjuster finds that the roof was already in bad shape, old and poorly maintained, which made the damage way worse. What happens then?
Then you, the homeowner, are in a very, very tough situation. The policy is for sudden accidental loss. If they can trace the severity of that loss back to your neglect.
The claim could be denied.
Partially or even fully denied. It puts all the responsibility on you to keep the property in good shape. If you don't, your mandatory coverage might not even work when you need it most.
Wow, that's a heavy burden. And then there's the other big one you mentioned, contents.
Yes, the policy explicitly excludes the contents inside the house.
So a flood comes through that's a covered peril, and it destroys your fridge, your sofa, your laptop, your family photos. The NHT peril insurance pays. What?
Zero.
Zero.
Zero. The policy is incredibly rigid. It will pay to put the building back up. It will not replace a single item inside that building.
So if you only have this mandatory policy, you're covered structurally, but you could be left personally bankrupt from the loss of all your possessions.
That's the clearest signal that you absolutely need a separate contents insurance policy to protect your own financial life.
Okay, let's pivot and really synthesize this, because this feels like the core aha. On one side, we have the mandatory NHT peril insurance. On the other, a comprehensive homeowner's policy. What is the fundamental difference in their philosophies?
It really just boils down to who the policy is designed to serve first.
Okay.
The NHT Peril Insurance is lean, it's standardized, and it's focused on the structure against a very specific list of events. Its primary goal is to protect the lender's interest, the collateral.
And the comprehensive homeowner's insurance.
That is designed to protect your entire financial world as a homeowner. It includes the building, of course, but it adds that vital contents coverage we just talked about. And crucially, it adds personal liability protection.
Ah, the liability piece. That's so often overlooked, but it's massive.
It is. Think about it. A delivery driver slips on your wet steps and gets badly injured. The lawsuit that follows could completely ruin you financially.
And the NHT policy.
The NHT policy will cover the steps if a hurricane breaks them, but it offers absolutely zero protection against the lawsuit that happens on them. Liability coverage is probably the #1 reason to upgrade to a full policy.
So one is the bare minimum required by the lender, and the other is a full financial shield for you, the borrower. What about flexibility then? If you, the homeowner, find a better policy out there, maybe it's cheaper or has broader coverage, can you switch?
You can, yes, but it's not like just shopping around for car insurance. It's a very controlled process. You need the NHT's written approval.
And they have requirements, I assume.
2 big ones. First, the new policy has to meet or exceed their minimum coverage standards, so all those perils we listed. And second, it has to be properly assigned to the NHT, so they remain the primary loss pay.
So you can shop for a better rate, but you have to prove to the NHT that their collateral is just as protected, maybe even more so, under the new plan.
Exactly. The paperwork and the burden of proof are all on you. You can seek better terms, but you absolutely cannot compromise the NHT's security.
Okay, let's fast forward. Best case scenario. You've paid off the loan, the mortgage is gone. What happens to the insurance requirement?
Once that loan is fully paid, the requirement from the NHT is gone. It's no longer mandatory.
Because the reason for it protecting their collateral is gone. The house is yours, free and clear.
That's right. And at that point, you have a choice to make. You can continue the policy privately, you can upgrade it to a full homeowner's policy, or you could cancel it.
Which, as the source material makes very clear, is probably not a great idea.
A terrible idea, frankly. The risks, the hurricanes, the floods, the earthquakes, they don't just disappear because your mortgage is paid off. The only thing that changes is that now if disaster strikes, the cost of rebuilding is 100% on you.
Right. So for most people, keeping that structural insurance is just common sense for protecting their biggest asset.
It's non-negotiable for wealth preservation in a place like Jamaica.
So connecting this to the bigger picture, how does this NHT model compare to getting a mortgage from, say, a private bank?
Well, the fundamental goal is the same. Both require mandatory insurance to protect the lender's interest while the loan is active.
And both focus on the building itself.
Right. But the execution is different. The NHT's approach is, by its nature, standardized and policy-driven. It's designed for the mass market.
Whereas private banks are more bespoke.
I think that's a good way to put it. A private bank might give you more flexibility in choosing an insurer from day one. They might also require higher coverage limits depending on their own risk assessment of a high-value property. They might even bundle in other requirements.
So more customization, but also maybe more complexity.
Exactly. The NHT gives you uniformity. Private banks offer more customization.
So what's the bottom line here? What does this all mean for you, the homeowner? I mean, the main takeaway seems to be that NHT Peril insurance is the standardized safety net. It's there to protect the loan collateral your house against major disasters.
Yes, it ensures the property can be rebuilt, but its focus is external. And that means you have to be proactive about protecting your internal personal world, your belongings, your appliances, and your liability from legal risk. For that, you absolutely need a separate, broader policy.
The mandatory policy covers the lender. You have to cover yourself.
That's it. And this raises a really important final question for you to think about. Given that crucial rule that the insurance money is used first to repair the home and it's all controlled by the lender, what do you do if the repair costs are more than the insurance payout? Or, and this is much more common, what do you do about temporary housing? The cost of renting somewhere else, of storing your things, all while you're waiting for the rebuilding process to finish. That process can be slow, and the policy itself probably won't cover those displacement costs.
That is a very challenging thought, a real gap that requires personal financial planning. Well, we hope this deep dive helps you navigate all of that with a bit more confidence. And of course, remember that policy terms and NHT practices can and do change over time. So we strongly encourage you to seek independent advice from the NHT, a qualified attorney, or a licensed insurance broker before making any decisions. That's all the time we have for this deep dive. We'll catch you next time.